0.02%, according to the latest figures from the National Bureau of Statistics. A slight but notable decline that's raising questions about the state of the economy. But what does this number really mean for everyday Nigerian, for businesses and for the broader economy? Is this a sign of genuine progress? Joining me tonight to break it all down is a respected economist and policy analyst, Kaide Oyedeji. Help us understand the forces behind this inflation movement, the implications for monetary and fiscal policy, and what lies ahead for Nigeria's economic future. Thank you so much for staying with us, for joining me on the program. Thank you so much. Good evening to you. So we have the figures. At a glance, what does it mean? What does this number actually mean? What does it tell us?
Oh, the figures are beginning to look good. We are beginning to get out of the woods. We are beginning to heave a sigh of relief. We've come to a very difficult period when everybody had to battle with inflation, rapidly rising prices of goods and services. And that has been on for a while. Since 2022, we've not had inflation rates at around 18%. So it's a very good one. And I think it gives everybody, consumers, business operators, policymakers, government, a reason to be positive. We are coming from a period when everybody thought they could give up on the economy. The reforms came with a lot of challenges.
So we should give up, because it looked very scary.
Very scary, yes. But then some people were able to see through the whole process and say, oh, we have to go through this difficult but inevitable process so that we can have a better economy.
So for non-economists like us, people like us who do not understand the figures, thanks to you, what exactly is responsible for this recent drop?
You know, I think I was on this station about 2 years ago, exactly around this time 2 years ago. And the contention then was that, can we get back to where we should be? Can the process lead to something positive? Improvement, can it lead to improvement in the quality of living of an average Nigerian? And my position then was that, yes, it will be difficult. We'll go through a very difficult period. There will be increase in prices of commodities, of goods and services. Everybody would find it difficult. But we'll now get out of that and begin to have a new lease of life. The adjustment is still ongoing, but substantially we've had a series of adjustments within the economy, leading to new levels of equilibrium here and there. And now we have stability. We expect us to move from that gradually to a period whereby the average man on the street, I know that's what you are really concerned about, the average man on the street will have access to cheaper goods and services. It's a gradual process. Now we are at the point where government, policymakers, people can say we have stability. Prices are not flying radically, sporadically like we had about a year ago when inflation rate was about 37% or thereabouts. So when you now look at it, what are the figures, what are the factors responsible for this? We've had stability in the exchange rate in the last 6 months or thereabouts. In fact, from this beginning of this year, we've had it. The exchange rate, Naira to dollar, 1,600, 1,480, and it's been relatively stable. When you have stability in the value of your currency, your exchange rates, you begin to have more inflow, more activities, more inflow of investments, production level will go up. Then when you take that one with other indicators like the performance index, manufacturer, I see that it has also been itching up gradually. Local production is on the rise. Consumer spending is on the rise. People are having more and more increase in their disposable income, and they're able to spend more. They're able to live better. Now, break it down beyond that one. Nigeria is also making more money from oil. Oil sales is giving Nigeria money, is pumping money back into the economy. That means gradually, that will permeate into the pocket of an average consumer. It will circulate. It may take time, the kind of economy we have in terms of income inequality, but I don't think we should dwell so much on that. But gradually, it will begin to impact on the pocket of an average Nigerian. Now, let's get back to more basics. We've had improvement in the supply of food commodities because a major revelation is that food inflation dropped drastically from 37% or about to about 16.6 7% in September. Why do you have that one? Government has brought in good policies. Some people will say those policies may not be very good. Government has been able to approach food supply with a level of flexibility, unlike when we had a terrain or a regime of rigidity in terms of what we bring into the country. Government has been able to informally relax that a bit. Then government has also pushed so much more investment into agriculture than we had before. And if you look at the trend, farmers made a lot of money last year from cash crop, from food crop, from cocoa, from corn and all of that, from even poultry products. That was a big encouragement for farmers to go to farm this year. So productivity is on the high rise. We have cassava coming out en masse to the extent that prices fell by about 70% this year. And corn has come down. You have influx of products coming into the market. Right. Now, that's a good one. The issue we have now is this sustainable?
So we'll get there in a minute, but let's still stay on the factors that may have contributed to this recent drop. Do you think CBN's monetary tightening may have played a role here?
Monitoring?
Tightening, the policy.
Oh, yes, it must have done that because one thing the CBN has done in the last 12 months or thereabout is to continue to tighten up liquidity within the system, and they increased MPR, monetary policy rate, consistently for a long period. Then last month, they realized that, we are almost getting out of the woods. They reduced it a bit. What CBN was doing was to make sure that we don't have so much money within the economy. The liquidity position is managed in such a way that you don't have so much cash pursuing the little items we have. But now that is getting better, CBN is beginning to ease on the rate, ease out, making sure that they reduce the rate so that cost of funds can come down. Other rates you can follow. But the most significant part of this is that government has been deliberate in making sure that people don't suffer unnecessarily or excessively. Number one, if you look at this time last year, a liter of petrol was about 1,200. Government has deliberately, by various means, ensured that it comes down drastically to about 865, 900. That's about 20%, 25% reduction in the cost of fuel. And that has impacted positively on the cost of logistics generally.
But if we're not careful, we may start getting it at 1,000 naira per litre.
Well, whatever it is, government can only facilitate. Government is not the supplier of food or anything. You will see what they did with Dangote. They were able to give him naira for crude, an incentive to make sure that it can also get those products directly to the markets at a relatively low rate. So logistics is coming down, or has been relatively stable for the past 12 months. Then we have like I said earlier, food produce has improved considerably. A tuber of yam, for instance, from our research, came down this year when we compare it to what we had last year, about 30%. Cassava was about 60% down from a ton of cassava from what we had last year. Tomato, we've been very lucky this year. It's been relatively stable. Even when we are almost selling at the same quantity we sold at a particular price, the same quantity we are selling at off-season period. So everything seems to be working well for government.
That sounds good.
But
let me take you back to CBN and its monetary policy. Do you think the Monetary Policy Committee should maintain this approach or ease off soon?
Well, they just made a reduction. They just reduced the NPR, and by the time they meet again, we will expect them to continue in that respect. But mind you, we are getting into the last quarter of the year. A lot of factors will come to play. The key thing will be government fiscal policy for the coming year. By the time you see the budget outlay, you'll be able to have a clear indication of which direction government wants to go. And that will also determine the direction the CBN will go. For instance, this year we've had a lot of deficit in terms of our projection for oil outputs, which was about 2.03 barrel per day for oil output. The price of crude oil too was projected to be at $70 per barrel. We are doing about $60 per barrel now. So when government puts all those things together, government will also set a target for foreign exchange. So people should be calm, watch what government's cooking. If, for instance, the budget estimate is we're going to have, for instance, maybe the target of 1,300 to $1, then you can be sure that's going to form a guide for investors, for analysts concerning what will happen next year. But on the part of the CBN has no choice. If you see the rates are falling for government securities already, coming down to around 15% or thereabouts, that trend is likely to be continued. What we had in the last 1 year was an aberration where you have risk-free assets trading at around 20-something, 25, 24%. It's a disincentive for manufacturing. It simply means if you have ₦1 billion, for instance, instead of beginning to spread yourself thinking about putting that money into manufacturing, you just go put your money in the risk-free assets. That means whether you work or not, you are earning about 20-22% from interest from your investment, from your deposit. You don't need to employ people. You don't need to do anything. So it's important for the CBN. It's important for government to ensure that that does not continue for so long. They had to do that one because their hands were tied. The economy was in a deplorable state. And CBN had to put up its thinking cap, making sure that they look at those variables critically and adjust them as much as possible. But now we are out of the woods.
All right. But for the sake of investors, I do apologize for mentioning, does this drop signal some sort of improved stability for investors and business operators?
Absolutely. All factors are pointing to the fact that Nigeria is doing well. The GDP is growing. It's growing at above 4%, and we expect to end the last quarter of the year at around 4.5 or thereabouts, which is good. The last time we had this kind of growth was at 5%, 2021 or 2022. So we are back to what it should be. And if government sustains this radical approach towards managing the economy, we can be sure we'll be approaching between 5 and 6% before the end of the next year. That's one. Number two is that the exchange rate is becoming stable. It's an incentive for foreign investment. They are likely to begin to think about what to do in Nigeria. And the news is everywhere. From Brazil to United Arab Emirates, they are looking at Nigeria as the biggest destination for investment. If you are a foreign investor, you're a private equity fund, and you want to take reasonable risk anywhere you're in the world,
the president has
Nigeria is the place to be.
All right. If you were to advise, or if you were advising the CBN and the Ministry of Finance today, what would be your top recommendations to sustain inflation control?
Well, the most important thing is for them to continue to work on the fiscal side of the economy. It is important.
What more do you think they need to do?
They need to improve on infrastructure and security. They need to make sure that investment in the real sector is sustained, especially in terms of infrastructure and agriculture. If they're able to do that, they will make the work of the CBN easy. I'll give you an instance. The price of cassava per ton fell by about 60%, 70% this year. Many farmers are likely to look back. Some of them would move from food crop to cash crop. Government must plan for that by making sure that you have deliberate efforts to keep them on the farm. If you have done cassava this year and you have incurred loss, or you didn't meet your expectation, you didn't meet your profit targets, you are likely to look back and say, no, I'm not going to the farm next year. So a lot of people will be discouraged. And it's also a political issue.
Yes.
Oh, we are hungry, we are not making so much money. You begin to see people politicizing that and co. So government must be on top of the situation by making sure that, number one, we plan well ahead for the next planting season. That's number one. Then you must be able to go back to the drawing board. We've withdrawn unreasonable subsidy in energy that's disproportionate and it's in favor of the rich. We now need to look at into agriculture in particular. How do we subsidize agriculture in a way that won't compromise on integrity and accountability? That means you begin to look at how you get those tractors. We have 3,000 tractors.
So let me put you on hold while we go for this break. And when we come back, we'll expatiate this conversation, because I want you to really expatiate on the rules. What roles should structural reforms in all these sectors play?
Okay,
and I'll be right back. Please stay with us, everyone.